The broadcast is now starting. All attendees are in listen-only mode.
Welcome, and thank you for joining us for today's webinar entitled China's Mobile Payments Industry, What's Next? Brought to you by Kapronasia. My name is Paul Robinson. I'll be acting as the webinar moderator. Offering a relatively cheap and certainly a more convenient method of making payments than traditional cash or card, mobile payments promise to change the way that Chinese consumers pay for goods and services. With over 1.3 billion people and nearly one mobile phone for every man, woman and child, the market potential is absolutely enormous. But so far, although many of the main players have already set up mobile pilot programs, none of these programs have gained critical mass. In this informative webinar, we'll explain the key trends and the issues that are shaping the market. We'll also learn how and why the major players compete and cooperate in the same market, the evolving standards, and what you can expect in the future. And you'll also hear how you and your company can take advantage of future market opportunities. Now, I do need to inform you that today's session is being recorded and is running in listen-only mode. However, we really want to encourage feedback and questions from you throughout the webinar. Now, to facilitate this discussion, we're going to use two features of the software. First is the attendee viewer, where you'll see the presentation, which I'd recommend maximizing now so you can see it in full screen. The second part is the control panel. This is where you can interact with us. The control panel can be opened and closed by clicking on the arrow button on the Grab tab. In the control panel, you're welcome to submit questions and comments to our presenters. We'll be answering as many of these as possible throughout the presentation and also at the conclusion of the webinar too. Now, with our housekeeping out of the way, let's get started. Our presenters today and our hosts are Zenon Capron, Managing Director of Kapronasia, and Ken Ding, one of Kapronasia's senior analysts. Both Zenon and Ken are joining us from Kapronasia's head office in Shanghai, where as one of Asia's leading providers of independent research, custom consulting, and advisory services focusing on the financial industry and financial technology, to help clients understand and navigate the challenges they face in a challenging region, with rapidly changing business, operational, and technological environment. So let's get the discussion started. Let's hear first from Zenon. Go ahead, Zenon.
Thanks for the great introduction, Paul, and welcome everybody again to the webinar today. As Paul mentioned, what we want to do today is give you an overview of what's happening in China's mobile payment industry. As are many things within China's financial services industry, this is one of the more rapid moving areas. What was true last year is not true this year, and things are moving very rapidly as consumers adapt to the new usage models of mobile payment, and companies, financial institutions, China UnionPay, launch new business models in the market to take advantage of this market opportunity. So hopefully what the report or what the webinar today will give you an idea of an overview of what's happening in the market and some of the key statistics, business models, and drivers of the market. Before we get started on the meat and potatoes of what we're looking at today, I wanted to briefly talk about our methodology and purpose. And the methodology for this study and this webinar are very similar to the methodologies that we use for most of Kapronasia's research. The findings are based on a combination of secondary research, which is comprised of internal knowledge, government, vendor, and financial institution supports, as well as primary research. So that's talking to people within our contact database with financial institutions, vendors, and industry experts to really understand what's happening from a first-hand perspective in the market. The purpose of the report and this webinar is to identify China's key mobile payment issues and trends. As I mentioned, it's a rapidly moving space, so what we want to do is give you an idea of what's happening at this point in the market. Also, one of the characteristics of the market that was mentioned in the webinar invitation was how major players compete and cooperate in the same market. And we'll talk about that a little bit later in the webinar as well. We want to give you some suggestions about how you, either as a financial institution, a vendor, or an industry expert, can take advantage of this market as it expands. And finally, we want to give you an idea of what will happen in the future. So briefly, if we look at what's happening in China now, obviously the economy is growing, and China's growth story is really the global growth story, especially with everything that's happening in the U.S. and Europe that's slowing down their growth, in particular in Europe with a sovereign debt crisis. Essentially, what was a financial crisis that started in the U.S. has now expanded to Europe. China has remained somewhat insulated from that, but there are still some challenges in China's exports, But balancing that off is the increased consumer demand from within the country. So over the previous years, there's been a lot of criticism of how China's economy is growing as it is heavily export reliant. But what we're seeing now is that consumer demand is growing as well, and that's a big part of the mobile payment story is domestic consumption. What we're also seeing in the market is a slowing pace of credit and non-performing loans are expected to remain risk factors for continued growth in the economy. But this will be coupled with a large amount of financial reform that we'll see in this current 5-year plan period, which started last year and will go through 2015. The other factor that we need to keep in mind, especially for this year, is the leadership transition in China. So we've already seen the head of the China Securities Regulatory Commission, the Banking Regulatory Commission, and the Insurance Regulatory Commission change, as well as the central bank, which will change this year as well. So with these changes in staff and the senior leaders in those organizations, we should expect to see new policies come to market over the course of 2012. So this growth within the industry, obviously as the financial industry is a key support of the entire overall growth of China's economy, we expect to see investment specifically in China's banking industry to continue. You can see on the slide that we have on the screen right now, IT spend will continue to grow. It's already massive in China and will continue to grow throughout the course of 2012. One of the big areas that we talked about a little bit in this presentation, we've talked about in other reports that we've done, is the small and medium banks. One of the characteristics of the financial industry here is that the top 5 banks were largely state-owned up until a few years ago when many of them had their IPOs here in Shanghai and in Hong Kong. And those banks have typically dominated the industry. But what we've seen over the previous years is these small and medium banks in the form of city commercial banks, like the Bank of Shanghai, or joint stock commercial banks like China Merchants Bank. And really these smaller banks, they can't compete on the same scale as some of the larger banks like the Bank of China and the Agricultural Bank of China, the Big 5. So a lot of the ways that they seek to compete are on the technology side, so using technology as a competitive advantage. And a lot of the innovative business models that we're seeing within the mobile payment space are also driven by the small and medium banks. So for the presentation today, we'll be largely breaking it down into 4 sections. We'll start off by defining what we mean by mobile payments, which is a very short section. Then we'll talk a little bit about the market as a whole, so looking quantitatively and qualitatively at the market size and some of the trends within the industry. Ken will then take over for sections 3 and 4, where we'll talk about a little bit more about the industry dynamics, the business models to see, as well as going through a case study of China Telecom and their mobile payments offering. So before we get started in looking at what's happening in the market itself, it's worthwhile defining what we mean by mobile payments. So for the purposes of this webinar and our report, we're talking about mobile phone payments. And predominantly there are 2 kinds of mobile phone payments, at least in China. One is a remote payment and one is what we call a near-field payment. And so the remote payment, you can picture that is that you go into a store and to complete the payment, you're not actually interacting with anything within the store. You're using your phone and you're browsing the web or using an app on your iPhone to actually complete the transaction. Where near field payment, the closest thing to that is probably when you use your transport card. So if you use a transport card here in Shanghai, Beijing, Hong Kong, the Octopus card, or in Singapore, when you wave it in front of a reader and it automatically deducts money from your account. So that's what we mean by near field payment. And most of what we're talking about in this presentation, in this webinar, and the report is the near field payment itself. So when we look at a comparison of the two different systems within China, the technology for remote payment is largely based on what I mentioned before, WAP, GPRS, SMS. So again, it's remote technologies. It's technologies that you have that most phones have today. It's typically an online transaction, so there's no such thing as an offline transaction, and you need to have some kind of connection to either the mobile network in the case of SMS payments or to the data network in the case of using an app or using a web browser on your phone. And there's no specific requirements on users' mobile phones. So when you think about a lot of the advancements that have been made in mobile payments in Africa in parts of India and indeed the rural parts of China, a lot of that is SMS-based payments. And so with those, even the most basic phones on the market have SMS today. Near-field payment, on the other hand, is more based on near-field communications technologies, so things like NFC, RFID, Bluetooth, and infrared. And so these are technologies, as I mentioned before, that you would swipe your phone or your card in front of a reader that would then deduct the money from your phone. So with the online and offline transactions, that's possible with near-field payment. So if we thought about what happened in the online payment space, in the remote payment space, those are only available online, whereas for the near-field payment, you can do both online and offline. So with the offline payments, it would be very similar to your Metro card, where there is you can swipe and the amount is deducted from your phone, from your physical phone. So in that particular case, you don't need to have a connection to the internet to complete that transaction. So when we look at the market as a whole, it's key that mobile phones are a growing segment of the market, are nearly ubiquitous in China. The population of China is growing rapidly, but we're nearing 100% saturation in terms of mobile phones, meaning that one mobile phone for every man, woman, and child in China, which is a tremendous market, and we're seeing that the number of 3G users is increasing as well. So what this is basically doing is really setting the stage for mobile internet and mobile payments, which is a key part of the story. So as this penetration continues to grow and the number of 3G users continues to grow, that's really providing the infrastructure for this, and we can see that the penetration of the 3G penetration is also very, very high as well and continues to grow in the future. In addition to the mobile phone users themselves, what they're using the mobile phones for is changing as well. So when you look at the mobile internet market, you can see the number of mobile internet users in China from 2009 out to 2015 based on our estimates. It's nearly probably about 40 to 45% of the total population of mobile phone users will be using mobile internet in 2015. And you can see, to put things in perspective, we put the population of Canada and the population of the United Kingdom on there. So you can see through 2015, the number of mobile, every year China will be adding more than the population of Canada to the number of mobile internet users in China. So we're really dealing with a tremendous amount and a tremendous market here, both in terms of the number of mobile phones and the mobile internet users themselves. What this is driving is a change in consumer habits, and we're seeing more and more that consumers are using their mobile phone for shopping. This is being driven from anything from purchasing tickets for travel to movie tickets to group buying, which was a big trend in China over the past year and a half, similar to the Groupon model here in China. So the amount of shopping that's actually happening on the mobile phone is increasing very rapidly, and this will continue to expand as more online providers of shopping services like Taobao provide the opportunity for you to actually shop and create and complete your transaction completely online on your mobile phone. So Taobao, if you're not familiar with it, is somewhat equivalent to the equivalent of eBay here in China, and they also have their own payment mechanism similar to a PayPal. So they can provide the entire value chain in that, and indeed there's a large number of shoppers online that use Taobao for buying anything from household goods to iPhones to tickets to sporting events. One of the complications of mobile payments in China is the fact that there are conflicting technologies. Now, if you followed the telco industry in China before, you'll know that there are two types of 3G services in China as well. And so the more internationally accepted 3G is supported by China Unicom, and China's own version of 3G is mainly supported by China Mobile. So if you have a 3G phone that's native to, say, the UK or Europe, your 3G phone won't necessarily run on China Mobile's network here in China, but it would run on China Unicom's network. Similarly, if you took a China Mobile phone outside of China, it would not run on the 3G network in Singapore or the 3G network in the UK unless that was enabled. So we're seeing the same thing actually happening in the mobile payment standards. So the 13.56 megahertz standard was actually the international standard for near-field communications, and China has developed a 2.4 gigahertz standard that's developed independently. And in all likelihood, these will coexist in the future. So we'll see the same thing happen in the mobile payment space and the near-field space that we've seen with the 3G space, where we have two coexisting standards, at least for the next 5 to 10 years. There are mobile standards, mobile near-field payment standards that will be defined over the course of 2012. These standards will be covering the wireless communication, the protocols, the terminals that will be used as point of sales, as well as the application management security and the testing standards for payments. So those standards will be developed over the course of this year, but we still expect there to be two standards going forward. So within those two standards, what we're seeing is various different technology platforms that are being developed. So there's the traditional NFC platform. There's a platform called SIM-Pass that Ken will talk about a little bit later. And then there's an RF SIM technology that's also being developed that's more on China's standard platform. So we're really seeing this very heterogeneous environment where there is no particular technology or no particular business model that's really dominating the market at this point. So we've seen in various, typically what's happening in the market is that in various different provinces of China, there are pilot programs that are being put in place. So during the case study on the webinar, we'll talk a little bit about China Telecom and their SIM-Pass solution and where that's being trialed. But what you'll see is you'll see China UnionPay, which is using the NFC Secure Digital or SD technology, and that's in various pilot areas around China. But so far, none of these technologies is being implemented across China as a whole. Now, in addition to these near-field technologies, there's also kind of hybrid remote near-field technologies with barcode pay and Square. So Square is very similar to the payment technology of the Square company in the West. The barcode technology is such that when you're completing a transaction, a barcode will actually come up on the screen, and you can swipe that barcode in front of the reader in the point of sale in the store that you're buying the goods from, and that will complete the transaction. So it's not technically a near-field technology in so much that it's a radio frequency, but it allows you to complete the transaction by showing a barcode. As is many things within the financial industry here in China, if you compare regulation in China as compared to the West, China has largely come from a highly regulated market to I wouldn't say a looser regulated market, but a gradually loosening regulated market. Whereas in the U.S., what you've seen is a loosely regulated market that is gradually becoming more regulated. So if you look at the financial crisis a few years ago, the credit default swaps that really caught the American economy on the blind side were largely down to an unregulated market that the government really didn't have insight into. And so now we're seeing regulations being put in place to regulate that market. In China, when we look at the financial industry here, it's been largely regulated to start with and then gradually loosening. So if we look at the capital markets over the course of last year, the financial futures market came on. So it's interesting what's happened in the mobile payment space because it essentially has caught the government by the blind side and in terms of several different kinds of payments actually as well. So in 2012, what we saw is that the government retroactively put in a regulation requiring operators to obtain licenses to operate in various different payment industries. So essentially those are across 5 different areas that we can see on the screen here. So internet payment, mobile phone payment, prepaid cards, fixed-line payments, and money exchange. So these are essentially licenses that are required from any of the telco operators, the mobile network operators, any third-party payment companies like Alipay to provide services in the payment space. And so we can see there were three batches of licenses that were issued over the course of last year. And now, so within the mobile payment space, we see that there are 26 now that have licenses to operate in that space. Very briefly, when we look at the total usage of China's mobile payment market, we're seeing that that's increasing rapidly. So we expect in 2015 there will be nearly 441 million mobile payment users in China. And then when we look at the transaction value of those users, we can see it's up into the billions very soon. And the basic idea here is, as we talked about before, this is all building on the fact that mobile phones are becoming ubiquitous in China. More people are using 3G services, are moving to smartphones, and starting to use these advanced functionalities of their phones more, which is driving the mobile payment market. Now, when we look at near field payments as a percentage of the total market, seeing that gradually over time everything is moving towards that. So in 2015, nearly 75% or three-quarters of the payments will be made by these proximity payments or the near field payments within the space. So that clearly, in our minds, is one of the key areas of growth within the mobile payment space, and it is an area of obvious growth. If everybody has their phone, they have their payment mechanism. There was a study that was done in Europe a couple years ago in Italy, and given the choice between car keys, wallet, and mobile phone, people chose mobile phone as the one thing they wouldn't leave home without. So it's not the American Express card anymore, it's the American Express card built into your mobile phone. So hopefully that's given you an idea of what the market is for the mobile phone payments right now, the typical flow, although there are different business models that are currently in play now in China. When we look at the different parts of the value chain, it's clear that the network operators, China UnionPay, the banks, and third parties really have control over what's happening in this market. And we'll see on some of the business models on the next slides that it really is these guys that are driving each of the potential business models. So when we look at settlement and account management, that's typically held at the top level of this pyramid. The connectivity and transaction testing, a lot of times the network operators also handle that on behalf of the industry. Further down the chain, you can see the software and support and hardware support largely comes from external vendors. So we're seeing a lot of both domestic and international vendors that are coming to the market and supporting mobile payments and the solutions that the various providers are putting into place. So Ken mentioned the different business models before, and this slide gives you an idea of really what happens in each one of these. So predominantly there's 4 different kinds of business models. The top left is China UnionPay dominant. So if you think about China's market, China UnionPay is the main bank card provider in China. They provide the national switch. So any bank card, whether it be an ATM card or a credit card, will have a China UnionPay logo on it. So for that reason, their engagement and their kind of dominance within this industry, I should say, is quite high. And that's one of the reasons that we feel that their potential success is going to be quite high in the future. Similarly, with the operator dominant, so if you think about China UnionPay, what they bring to the table is an incredible network of merchants. Their acquiring network is huge because they set up point-of-sale terminals in nearly every store in China. Whereas operators, if you remember back to the first slides that we were talking about, with 1.3 billion customers, they bring a lot of customers to the table. So it's interesting to see these two compete yet cooperate at the same time. So if you look at the top right, we can see in certain models they actually do cooperate in the market. So this would be when we have operators, banks, and third-party providers all in the same cooperative space. The other section of the market that we see in the lower left-hand corner of this screen is the third-party dominant market. So this is third-party providers that would be similar, if you're familiar in the West, with PayPal or in China with Alipay. So a lot of these providers are starting to move into the mobile payment space as well. So they will likely have what we call a medium chance of success, but we really see that China UnionPay and the operators have the largest chance of success, but typically when they're working on their own. So in the cooperative model, we haven't really seen one of the pilot programs from the cooperative model come out to be successful on the national scale. So we're not expecting that to change anytime soon. So if we look at the China UnionPay model, we talked about this a little bit before. As you mentioned, that China UnionPay has those merchant relationships and keeps relationships with the banks as well. So, anytime a bank issues a credit card, they have to work with China UnionPay. And whenever a merchant sets up a point of sale, they tend to work with China UnionPay as well, because China UnionPay acceptance network is similar to what you would expect from a Visa or MasterCard abroad, is dominant in China. And they, in fact, are the only provider in that space. So if you look at what the business platform is, China UnionPay provides a lot of what goes into the mobile payment space. So they provide the bank card settlement system, which is the existing system that was in place, merchant management, online remote payment gateways, NFC, and the internet payment gateway. So they really capture a lot of the value chain in this particular space, and a lot of the core business platforms. So in many cases, as we mentioned before, because the banks are already cooperating with China UnionPay, they really don't want to stray from it in this model either, in the mobile payment space. When we look at the third-party driven business model, so we mentioned that on the previous slide as having a medium chance of success, they have captured a lot in the remote payment space, a lot of the market share in that space, but they face a number of difficulties and challenges. And a lot of that is down to the infrastructure that needs to be put in place. So when you look at what the mobile network operators have put in place and what China Mobile or China Telecom have done, as well as what China UnionPay has done, they really have already invested quite a bit in that technology and in what's in that space. So that's very difficult for these third-party providers who are coming on to really replicate, because there's a lot of initial investment and capital that needs to go into that. As well with the technology capability, the players that are coming to market in the third-party payment space, they typically come from the internet space or the prepaid card space. So they don't necessarily have the mobile technology or the mobile integration technology that a China Mobile would have or a China UnionPay would have. So also the technology is a challenge. And the strategic uncertainties of the market, as it's unclear what technology is going to be dominant, as there are multiple business models currently in the market, it's very difficult for them to pick a particular way to go forward on things, or to pick a particular business model to go after. So it's really only the top players like Alipay and 99Bill. If you're familiar with Alipay, that's part of the Alibaba network, which was originally a part of Yahoo or co-invested with Yahoo as well. But that's one of the larger players in the space, so they really have the business model and the capital to be able to go after the mobile payment space. But a lot of the smaller third-party providers are somewhat challenged in that. So if we look at the opportunities for vendors, there's a number of different opportunities in the space, and really this is the time to be entering the market if you're a vendor with a particular value proposition for this market. And all from start to finish, from the issuing and acquiring systems to the transaction processing, there's really a huge scope of what vendors are offering. And because China hasn't developed all of this technology domestically, there's also opportunities for foreign vendors to get involved in this space. And really the foreign vendors that have product offerings in the West, whether it be in Europe or in the U.S., those vendors that can successfully bring those business models to market here, cooperate with one of the big providers, are the ones that are going to be successful. But it is worth to mention that really we don't see entering on your own being a successful strategy here in China. We've seen business models in Singapore, in the West, where a third-party company has come to market, a foreign company has come to market and deployed a business model and been successful in that market. But because of the industry dynamics here in China, it's very difficult for any player that doesn't have connections with the major network operators or China UnionPay itself to actually be successful in this market. Because China UnionPay has that incredible merchant network, and because the mobile network operators have the big customer network, we really feel that partnering with those providers is the successful way to take things forward. So as I mentioned on the previous slide, in terms of recommendations, there is no perfect business model yet. When we look back at that quadrant and we looked at the CUP-driven model and the mobile network operator business model, there's no single business model that's been successful. And a lot of the business models, as we have in the case study later on in the presentation, a lot of the business models are in one particular space or in one particular geographical area. So we'll see a business model with China Unicom partnering with China UnionPay in Wuhan, or we'll see China Mobile partnering with the Bank of China in Tianjin. We see these kind of small business models that are in place, but we don't see any nationwide business models that have really captured a significant part of the market share. So eventually we think we'll see that, but for right now, you have to assume when you come into this market that cooperation and competition coexist in the market. So you'll see people like China Mobile that will be working with the Bank of China and with the China UnionPay. But at the same time, they'll also be working with the Agricultural Bank of China and potentially with Alipay. So cooperation and competition exist across. And as well, innovation. We expect to see a lot more innovation in the market. So it's really innovation and innovation in the future. And costs. We need to, the successful players in the market are going to be the ones that can reduce the cost and really make this mobile payment space a successful business model. And that's one of the key aspects going forward. And safe and convenient are not paradoxical. So, when we look at mobile payments, one of the key concerns is it safe? Can somebody steal all my money? Can somebody read my information off the phone? If you think about the mobile phone itself, there's a certain point that we've gotten to in our comfort with a mobile phone that we carry them with us all the time. The fact is that any of the mobile network operators could identify exactly where I am right now by triangulating my mobile phone. But the convenience of me using that mobile phone has made me give up those safety concerns. I do give up a bit of my privacy, but at the same time, the convenience of using a mobile phone outweighs any privacy issues. And so we'll expect that to continue in the future. As mobile phone payments become more ubiquitous and more convenient and safe, we feel that the consumer's attitude will change, and eventually that will become a key part of the industry. So very briefly, to look forward, we separated looking ahead into three separate areas, and what I'll do is I'll walk through this slide, and then on the next slide we go into the case study with China Telecom, and I've gotten a note that Ken is back online, so he can walk us through the China Telecom when we get to that slide. But when we look at the future for right now, in the regulation side, we'll see more regulations in the mobile payment space, more supervision in the payment space, and slower issuance of payment licenses. So those 26 payment licenses that we saw for mobile payments before, we don't expect that to increase dramatically in the future. It'll likely stay right around that same space. In terms of technology, near-field communication will still be the most popular and principal choice. And technology standards, although we have these two divergent standards, we feel that won't make such a difference in the future. China and Chinese consumers are already used to the fact that there are multiple standards within the marketplace. So we expect that comfort with the multiple technologies to continue in the future as well. In terms of the business models, we expect to see more cooperation between different players. Both foreign and local vendors will come to the market. Third parties will still be a key part of the remote payment business. And really, the development that we're going to see in mobile payments will really come in the near-field payment space. So we've covered a lot in the first three sections of this presentation, and now Ken is back online. So Ken, if you want to walk us through the China Telecom example, and just give me a note when you want me to switch slides, and I'll move forward on the slides as well.
Okay, thanks, Leonard. Okay, this section I will present a case study about a typical mobile operator model from China Telecom, which is one of the biggest mobile operator in China. Okay. So from this chart, we can see the first step is China Telecom will work together with their software partners to develop specific application system, and then they send this system to the car producer, and then car producers will integrate this system into the SIM pass car and sell these cars to the China Telecom. So actually, in this case, China Telecom use their SIM pass solution. Actually, SIM pass is a competing technology to NFC. This technology was developed by Watchdata, which is a Chinese famous smart car manufacturer. And this SIM pass car is based on double interface smart car technology. Just by inserting a SIM pass card into their handset, rather than change a new mobile phone, the subscribers can then have their handset for contactless micro payment and also fulfill the internet remote payment. After the users go to one of the operator's branch outlets to switch their SIM card as is shown in the step 4, they will have two payment accounts. One is connected to the internet for remote payment. The other payment call is called a mobile wallet, which allows the customers to conduct low-value near-field payments, such as public transit. Okay, please, then switch the next slide. Okay, regarding the merchant acquisition, in order to widen the merchant resource, because, China mobile operators, they don't have too much merchant resources. So China Telecom will choose one of the biggest prepaid card companies to work together. By working with prepaid card companies, they can share some merchants belonging to these prepaid card companies, so that China Telecom's users can also go to some merchants for shopping. Also, customers can also log into mobile phone applications to pay utilities bills by using the money in their internet payment account. Next one, then. China UnionCom's near-field payment can enable their end user to wave their mobile phone in front of the merchant POS terminals for their payment, and then China Telecom in China will control the transaction processing and account management, and will charge a certain percentage of sales fee from every transaction. These fees will be paid by the merchant. And currently, we found that in this business model, there is very little business intelligence and no loyalty programs or couponing for merchants. So we think that in the future, the China Telecom will launch some more value-added service. Okay, this is a typical.
Okay. Thank you. Are you finished there, Ken? You've got through all the slides you needed? Okay.
Yeah.
All right. Well, thanks very much to the folks there that held on there. We had some issues with the sound, and I think we took care of them. While we're getting some questions here in the background, as I mentioned to you before, we're going to go into Q&A here shortly. you've got them, put them in on the question panel or on the chat panel, and I'll ask those of the presenters here in just a moment. But while they're just coming in as well, we mentioned it earlier, today's discussion is based on Kapronasia's recently published Mobile Payments in China report. This report offers pretty cool insight into the China mobile payment industry, and it is going to be available as part of Kapronasia's subscription service. So we've got up there that the complete details are in that report. So if there's more detail coming in, if there's something you missed today, you'll be able to get that in that report. I've also had a couple of questions coming in from people as to whether the webinar recording is going to be available. We're absolutely recording it. You'll be able to listen to that, and it's going to come in on Kapronasia as well later on. And there will also be a general report availability May the 7th for subscribers. So if you haven't already registered for a subscription with Kapronasia, we're going to provide you with a link to do that as well at the end of the webinar. If not, just go on to kapronasia.com, sign up there, you'll get the newsletters, and you'll also be invited to get this report too. So with that said, let's just go to the next slide. We'll get into some of the question and answers here as well. So we've had a few come in. Then, and the first one came from Ellen, and it says, what are the main drivers of growth of mobile phones in China?
Okay. Yeah, as I discussed kind of in the beginning, if you look at China, and China is an incredible geographical area, one of the largest countries in the world, and because of that, there are strong geographical challenges, as in any place with a large country like this, and mobile phones are a way to bridge that gap and essentially make communication possible across a big space. And the same trends that we've seen in India and Africa in terms of people using mobile phones in communal settings and renting the use of a mobile phone from one operator. A lot of those drivers are the same thing that are happening in China. And in general, the average Chinese consumer is getting wealthier as well. So we didn't share the statistics during the webinar, but we have some statistics in our actual report about the percentage of smartphone adoption in the market. And it's clear, if you walk the streets of Shanghai, or if you go into one of the Apple stores, either here in Shanghai or in Beijing, it's clear, and you see Apple everywhere. You see iPhones everywhere, and whether that's a legitimate iPhone bought from the store, or if that's a gray market that was imported from Hong Kong and then resold here, smartphones are, at least in the urban areas, becoming ubiquitous as well. And so I think a lot of the mobile phone growth is really down to that, is down to an increasingly wealthy consumer, and to overcome the challenges of a large geographical space in China.
Okay, thank you very much for that. And there's just a follow-up question that also came in from Ellen on that as well. It talks about what about the main drivers of mobile payments?
Oh, sure. So I think I kind of hinted at it at the previous question. The fact that smartphones are becoming so ubiquitous, this is a natural extension of that. If you look at the average internet user, especially the youth here in China, much like Europe kind of hopped ahead of the U.S. in terms of mobile technology, I think China is rapidly getting ahead of everybody else in terms of the internet usage. When you look at the Twitter equivalents for here in China, the Weibos in China, when you look at the Renren, which is the Facebook equivalent here in China, or I should say one of the Facebook equivalents here in China, users are getting much more sophisticated with how they communicate with each other. Social media and social networking is taking off. And all of these are being driven into the mobile platforms as well. So when you ride the metro, when you're in a bus, you see people checking email. You see people communicating with each other on chat programs on their phones. And so really mobile payments are a natural extension of that. In many cases, because China is such a large place, it can sometimes be difficult to buy a particular item just by walking the streets. But if you go online, if you go on Taobao, you can buy anything from a pair of running shoes to a kitchen sink. And that, the usage of internet platforms like that, those platforms are gradually moving over to mobile space as well. And then as consumers want more options about how to buy things online or how to buy things when they go into the store, we're seeing that grow as well, and that's really driving the demand for mobile payment solutions and that entire space.
Great. Thanks very much for that answer. Actually, we're getting lots of questions in here, so we're going to try and get through them all as well. And just a heads up, if we do it, I know we said we're going to finish on the top of the hour, but we will continue to run through and get as many of these questions done while we're going through here as well. The next question, I think this actually came from Ken, but maybe Ken, you can answer it as well, which is it's not you asking yourself the question, but another Ken. I know that China UnionPay dominates the card industry in China as they're the only national switch. Do they dominate mobile payments, and if so, why or why not?
Okay. Even though China UnionPay dominates the car industry, but it doesn't mean that it can also dominate the mobile payment industry in China. Actually, if we compare with mobile operators and third-party companies, China UnionPay has some weaknesses. For example, first, it does not have as many mobile user customer base as operators have. Also, third-party payment companies have a much larger market share of remote payment business than UnionPay has. So, China UnionPay actually face a lot of competitions from other main players and need cooperation with them in the future.
Okay, thank you. Next question, Zanan, comes in from Alan. It says, how important is financial institutions' spend on mobile payment solutions as compared to the rest of their spending priorities?
Yeah, that's a good question. It helps to take a step back and look at what's happening in the industry as a whole. And I had mentioned this a little bit beforehand, but if you look at the way that the banking industry has developed in China, it was largely the large five, the big five commercial banks, the state-owned banks that originally got started in the industry. So Bank of China, Agricultural Bank of China, ICBC, China Construction Bank, and then Bank of Communications, which is kind of seen as the fifth of the large banks. So by the fact that it was essentially a monopoly between these five banks, a lot of the smaller banks, both Citibank, city commercial banks, and joint stock commercial banks, have to think about and have had to think about different ways of addressing the market. So there's no way that they can really match the scale of the large five banks. They need to start smaller and find a competitive advantage somewhere else. So the competitive advantage of an ICBC is the fact that they have 40,000 branches across the country. So nearly on every second or third street in a major city, you'll see an ICBC ATM. And so if you think about that, what that's allowed ICBC to do is to be somewhat lax on their customer service and somewhat lax in terms of their product offering. So this is where we're really seeing companies like China Merchants Bank. China Merchants Bank iPhone application is pretty thorough and pretty amazing. And so what they're trying to do is really to leverage technology to gain a competitive advantage in the market. So whilst, I think the mobile payment solution for a lot of these banks in the mobile payment space is very important for them because it allows them to have that competitive advantage in the market.
Okay, and on a related question also there, says China isn't completely separated from the global financial crisis. Won't issues like Europe's debt affect institution spending patterns and move them away from sort of nice to have services like mobile payments into something that they must have services and solutions such as risk management?
Sure, that's a good follow-up actually. I can understand that. I mean, if you look at China's banks over the past 10 years, one of the challenges that they had when I first got to China, which was in 2004, was on non-performing loans. And so one of the reasons for that was that there was no centralized credit database in China. So I could go to a Bank of China on one side of the street here in Shanghai, and I could go to an ICBC on the other side of the street in Shanghai, and I could take out a mortgage for the same house that I was buying or the same property that I was buying. So over the past 10 years, a lot of the focus of Chinese financial institutions has been to kind of get these basics in place. So developing the National Land Credit Database. Around the same time, a lot of the banks, China Construction Bank, I believe, was the first to have a consolidated data warehouse, really getting these basic level infrastructure plays in place to support the next level of growth. So yes, things like risk management, and these, as the person who asked the question mentioned, these must-have services still are important to the banks, but they do realize that the nice to have, the more advanced solutions like a mobile payment solutions, like some of the more kind of forward-thinking solutions, still have a play. And banks, because the consumers are adapting, because nearly every consumer has a mobile phone, because they're starting to use the mobile internet more, this is forcing the banks to invest in mobile payments and solutions like this.
Okay, great. Thanks so very much for that answer. We're still getting some more questions coming in here, so this is great. We'll get through them, as I said, as many as we possibly can. Ken, this one comes from Kirti and says, you mentioned the main business models in China today. Which do you think has the greatest chance of success in the future, and why do you think that?
Okay, it's actually difficult to say which one has the greatest chance of success in the future. And actually, no one has found a perfect business model for the mobile payment market so far. But we can expect that more innovations will happen to current business model in the future. And the most successful business model must be enough open for cooperation between different players and to be enough innovative to offer more value-added service in the future.
Okay, great for that one as well. Thanks very much for that one, Ken. Let me see, one more here, probably for Zenon. What makes China's mobile payment industry different than others, or is it not? And that one comes to us from Gilbert.
Wow, that's a very broad question. I think China's payment industry is unique. I think China is unique in a country in itself. I mean, never before have we seen a country that for nearly a decade has kept around 10% GDP growth year on year. I mean, what we're seeing in the economic development that we're seeing in China is probably a once-in-a-lifetime event that is unlikely to be repeated in the near future. When you look at the number of people, the amount of production, the amount of trade that's happening with China, and you know, its influence, its growing influence both here in Asia and globally, from a political perspective, from a military perspective, from a financial perspective. And we're seeing all of these things come together in essentially what I would say is a perfect storm. So when you look at where mobile payments and where mobile technology has really taken off, I mean, if we look at the M-Pesa example in Africa and how farmers and herders are using the mobile phone to conduct payments, to figure out which market has the best price, to you know, if their farm is 100 miles from either market, should they go to market A or should they go to market B? They can use their phone to do that, and they can conduct payments. And it's essentially what I heard a good quote from Tata TCS last week at an event here in China, what they call financial inclusion. So that's a big part of the story in Africa and in India, and it will be in China as well. And when we look at the west of China, the government clearly has a go west strategy, where they want to develop the west to be as competitive as kind of the eastern seaboard. So when you look at the big cities on the east that are traditionally associated with trade with Hong Kong, when you look at Shenzhen in the south, you look at Shanghai here in the middle, and Beijing in the north, a lot of the economic development and productivity is coming from the eastern seaboard. And what China wants to do is push that out. and to help the regions in the West become wealthier and become greater contributors to China's economic story. So I think this unique environment does make China different than what we're seeing in other places. And you know, all of the things that we've talked about over the course of this hour in this webinar play a part in this. So the regulators here in China and how they're regulating the market, the key players, the fact that you look at China UnionPay as the dominant switch provider, the dominant kind of card provider here in China. These all make China different than a lot of other large mobile payment market. And that's really what's going to make it dynamic and what I feel is the market leader in the space within the next 5 years. In mobile payments in Europe, they've been debating mobile payment standards for the longest time. NFC has been batted around for years, and nobody's found the right business model to make it work. The government, the key players in the market here in China, they will make it work, and I really see that China is going to be the key spot of mobile payment development, and probably the most diverse and dynamic industry across the world.
Great. Now, Zenon, there's actually some other questions. Sean's asked a question that's actually related to that, and I think we'll pop that one in here as well. And he asked, do you not think that cloud-based payment solutions would end up challenging NFC in China as well? So is there something on that you might be able to allude to?
Yeah, that's a good question. We didn't look too much into cloud-based solutions or cloud-based payment solutions for the course of this report. I think the key aspect in that is the consumer's usage habits and how they typically conduct payments now and they will in the future. The Chinese for many years have been very kind of addicted to cash. I mean, the physical aspect of cash is something that a lot of the Chinese consumers appreciate, and so the shift from cash to plastic solutions, whether it be in bank cards or credit cards, has taken some time, and it's clearly the younger generations that are really adopting that payment business model or the card business model, and I think it's largely going to be the same. It's really going to be somebody, whether it's a cloud-based solution or if it's an online solution or if it's an NFC solution. It's really going to be the solution that integrates into the consumer's way of life. And what we're seeing right now is that's mobile phones. The mobile phone, if we did the same survey that I mentioned before in Italy, I'm sure the mobile phone is the quintessential part of everybody's life, and that's what they take with them when they leave the house. When you go on the metro here, you don't see people reading books. You see very few Kindles or iPads. You see phones. And that's what people are using to interact with the content that they're getting, the people that they're interacting with, and the payment solutions that they're doing. So, if there are cloud solutions that can integrate into that model, then I think that makes a lot of sense. But whether that's a cloud solution or remote payment solution or an NFC solution remains to be seen.
Okay, great. So we also talked earlier on about the pilot projects, and Gabrielle has a question for us, and it says, so the pilot projects, who ultimately allows these to proceed? Is it the partner banks, or does the China Banking Regulatory Commission or the central bank get involved? So I'm not sure whether you're able to answer that one off the top of our head today. But.
I can say a few things around that. There are the government here in China runs both at a national level and a provincial level. So with any of these pilots, there's got to be, a tacit buy-in, whether it's explicit or not, with the local governments. The key dominant players in the market really decide where these pilot programs are going. So it's the China UnionPays, it's the China Mobiles, because they're really the ones that have the infrastructure, the wallets, and the depth to be able to conduct pilot programs. So any of the kind of successful pilot programs that we've seen that have grown from either the network operators or China UnionPay. And one thing, I touched on this earlier, but we don't say financial institutions so much. We say more China UnionPay. And really that's because China UnionPay is was originally designed and set up by the financial institutions. So the financial institutions in China, similar to SWIFT in the West, they own a percentage of China UnionPay, and they effectively have a say in what happens within that organization. But in many cases, they're beholden to China UnionPay because China UnionPay controls that payment switch. And so really, it's that scale that you need to have to enable those markets. And so in most of the cases, in most of the pilot cases, we've seen it be China UnionPay or the mobile network operators that are really driving the implementation. And in certain cases, then it would be the top 5 banks as well. So a Bank of China or a China construction bank that are able to drive those business models. But really, the smaller players, as we mentioned before, the foreign players that are coming in, the vendors, in very few cases have we seen them be successful in any of these pilot projects. It's usually driven by one of the larger players and then it involves the vendors in some aspect.
Okay, well, I'm just aware here that we've run over time a reasonable amount as well. I think we'll probably just take one more question here. This one comes from Christoph, and it came in earlier. It says Chinese merchants are typically reluctant to pay a merchant service charge. Are you able to provide more details on the services needed to generate interest in NFC-enabled mobile payments, if you see any as well?
Ken, do you want to talk to that, or do you want me to take that?
Sorry.
Ken, it's fine. I'll ask it again. I went through pretty quickly there. It says Chinese merchants are typically reluctant to pay a merchant service charge. Could you provide more details on the services needed to generate interest in NFC-enabled payments or mobile payments, if there are any? Is that something you'd like to answer now, or do we want to take that one offline with Christoph later?
Yeah, actually, the merchants in China, when the main players conduct their own near-field payment business in China, the biggest revenue is actually from the transaction fee from these merchants. And even though merchants are not very reluctant to pay this kind of transaction fee, but some main players such as China Mobile will give some discount to the merchants and encourage them to use their mobile phone as a payment tool. For example, give some 15% of discount to use their near-field payment or the NFC technology. And also some players will help the merchants to distribute their terminals, enable terminal support of the NFC mobile phone. So help the merchants to reduce their cost.
Okay, great. Thanks very much for answering, Ken, that one. Sorry to put you there on the spot there. Okay, well, as I mentioned, we're run over time here with about 10 minutes over time. We haven't been able to get to all the questions submitted during the webinar today, but we have been answering many of them in the background as well. If we didn't get your question today, the system allows us to keep your email address here. We'll get back to you individually with the answers to those questions as well. And I think with that, we'll go ahead and close out the webinar here. As I mentioned, we have been recording it today. You'll get a link and some information from Kapronasia here in the next few days to tell you how to listen to this recording of the webinar and also how to sign up for that subscription service too. And of course, we'd like to let you know that Kapronasia appreciates your time today and hopes you found the information both informative and helpful. With that said, I'd like to thank our two presenters today, Zenon and Ken, and this concludes our webinar for today. Thank you very much for joining us.